Associates. And with me today we have Joseph Loughran, who is our Marketing Vice President. We also have a special guest speaker that we're delighted to have join us today, and that's Andrew Spiro, who happens to be the Regional Director at Hancock. And the reason why we asked Andrew to join us today is he is an expert on long-term care, riders, products. He's got some great ideas with Social Security maximization, different sales ideas built around that. And they have a new program that they just released that he's also going to touch on, which I think all of our agents are going to love, and it's really a game changer in my opinion. So I'm not going to steal any of his thunder, so we'll let Andrew speak about that in just a couple minutes here. But I just want to give everyone a little overview, and then we can start to move forward with the presentation. So we're giving away a free 16-gig tablet at the end of today's call, so in about 30 minutes. And the winner is our 100th registrant, which we will announce at the end of today's call. So we're obviously very excited about that, and we think you will be excited as well. We try to do this a few times a month, as you know, just to kind of reward everyone for spending the 30 or 40 minutes on our weekly training webinars. So, you know, as an IMO, we need to sit back, and it's our job to go out and find, you know, different carriers, products, sales ideas, concepts that you can take away with you and start to use as early as tonight to make more sales. And that's the name of the game, obviously, to help your clients and make more sales. So what we're talking about today is just another idea that we think is going to help fill your toolbox, if you will, to gain more clients and more traction, be able to send out new mailers or email blasts to spark some new interest. So that's kind of the name of the game here. We also have our expo coming up in just a couple of weeks now. So we're very, very excited about this. We usually have about 200 agents and GAs in attendance. And like I just said earlier, how it's very important for Levinson to come out constantly with new sales programs like our free scholarship program, or new carriers or products like John Hancock and this awesome new Vitality program. Okay, that's all what we're going to talk about at the Levinson Expo on April 24th. We invite our top carriers to attend. We bring in different keynote speakers. We have a doctor flying in just to talk about how important living benefits are. We have top underwriters from all over the country. We're bringing in breakfast, lunch, snacks. The day is built around you and new sales ideas and concepts that you can walk away with to start making more sales. We're giving out free tablets, flat screen TVs, cash on the hour, okay, with every break. So it's really going to be a day that you will not forget, that's going to help take your practice to the next level, okay? And that's my personal promise to our agents, okay? Everybody will walk away with something. I don't care what level that you're on as far as your practice is concerned. Everybody will take something away from this meeting, and it will be well worth your while. That's just in 2 weeks, April 24th. You can register now. Okay, just a few more things here I'm going to add before we move forward. You know, today's call is really about living benefits. It's the new way of life insurance that pays while you're still alive. Okay, everybody knows about the old way of life insurance that pays when someone dies, unfortunately. But the new way of life insurance, which is a completely new spin, is insurance that pays while you're still alive. So the owner and insured on a policy, okay, can see the benefits while they're still alive. So it's a huge plus, and especially if you have an old book of business, you can dive back into that book and talk about the new life insurance, okay? So it's very, very important. Just this morning on Good Morning America, they were talking about, just happens to be, we're having our LTC Living Benefits webinar today. On Good Morning America, they were talking about how long-term care costs are increasing twice as much as the cost of living increases. Okay, that's huge. The average price now is about $90,000 a year. So it's your job to create a solution for your clients, and that's why we wanted to have this webinar today to teach everybody a little bit more about living benefits or long-term care riders or standalones, if you will. So we created a page on our website called Living Benefit Resources. As you can see in front of you, Joe actually highlighted that in red. If you click there, you will see all of our carriers and products, including John Hancock right at the top. You can click there for more information. Everything is at your fingertips. So a great place to, especially over the weekend, if you have any downtime, go over some of these brochures and you can start to create some new sizzle right away. Okay, so we're going to dive into today's presentation. Like I said earlier, we have Andrew Spiro joining us from John Hancock, and he is very, very sharp when it comes to living benefits. He puts on a great presentation, so sit back, take some notes, and we'll handle questions at the end. Andrew, are you there?
I am there. I just want to let you know I did hit show my screen, and for some reason, I'm not seeing the presentation, so that's the only concern I have right now at this moment.
Okay, give us just 1 second, and we will get this up and running. Just sit tight. Okay. Joe, is there anything that Andy needs to do?
Yeah, Andy, we can see your screen, so you may just have to go into either the PowerPoint or that folder where that presentation is.
So you can actually see my screen, so it is connected
Yep.
to GoToWebinar?
Yeah, we can see the connected to GoToWebinar screen right now.
Okay, so where would the file be then? Where would I have to go?
That in either your PowerPoint file or wherever you had it on your computer.
Because we're using your site, I thought if you I thought it would be on your. We're using the GoToWebinar, so I thought you were going to turn your presentation over to me.
Okay.
For me to take from there.
Well, I can pull up the LTC Rider Seller's Guide.
No, we wanted the presentation we put together.
Yeah, Andy, just pretend like you're on your computer wherever you have your slides. You can just pull them up, and we'll see your screen.
Got it. I see now.
Yeah.
Okay. Bear with me 10 seconds while I do.
Yeah, no, it's okay. This will be well worth the wait, everybody. So this is a great presentation. I've seen it before, and well worth the time. I'm sorry about that.
Guys, 2 more seconds. We're pulling it up right now.
Yep, no problem.
Terry? Bill?
Yes, we're here.
Okay, my presentation's coming over, and I apologize. So what I'm going to do is I'm going to start talking about John Hancock Vitality, okay, at the meantime. And then I promise this is just as cool, and everyone will be very happy with the presentation. So in 2 minutes, we're going to start, but I'm going to kick it off with this brand new rider that we have. Does that sound good?
Yep, no problem.
Okay, this is groundbreaking, guys. We have just come out with a brand new rider. I don't know if you guys have seen it on the Wall Street Journal, New York Times, it was on Fox News. It is super exciting. We think we're going to change the life insurance industry forever. And I will go into much more detail, and Bill and Kara will do a presentation later. But you're going to start seeing commercials, and they'll be all over the media, and it will be very important to have kind of a jump start. So the name of it is called Vitality, and it's a rider, and it's super, super expensive. It's $2 a month or $24 a year. And the goal will be that we will eventually add this to all of our products. Right now we have it on our term product and on our low-cost protection UL series. To make a long story very short, what this rider does is it's going to allow the consumer, the end user, to engage with us once they bought their insurance contract. I think everyone will agree with me right now that generally when you sell a life insurance policy today, there's very little interaction with the insurance company. You know, after they're underwritten and they're approved, they pay their premium to John Hancock, all they essentially get is a bill. And the contact outside, that's very limited. Well, now they're going to be rewarded if they engage in healthy behaviors. And by engaging in healthy behaviors, they'll get immediate benefits, not 10 years down the road, not 50 years down the road, day one. And what I mean by that is they'll be able to save up to 15% on their premiums immediately from day one. So, Bill, if you've got a premium for $100,000, you'll be able to save potentially $15,000. So instead of paying $100,000, you might be able to pay $85,000. Or if you have a $10,000 premium, you might have to only pay $8,500 or $9,000. And it doesn't stop there. Your clients will also get rewards along the way, iTunes gift certificates, Whole Food vouchers. And we've partnered with a bunch of people because we think by making your life easier and de-stressing it, you'll also live longer. So we have discounts with Hyatt Hotels, Royal Caribbean Cruise Line, Seabourn, all this kind of stuff. We have discounts and deals with, and oh, I see the presentation is on, that you can save up to 50% off the lowest published cruise rate. So, Bill, we have a case going right now. This is a true story. Clients got a $10,000 premium. We were able to reduce their premium to $9,000. They also are planning on doing a cruise next year, celebrate an anniversary. Based on the lowest published rate, they'll save an extra 40% off. And it's based on who's in your cabin, so it's a husband and wife. It's an $8,000 premium cruise saving plus $1,000 for premium savings on a $10,000. That there's a new type of insurance and there's an old way of doing insurance. The new type of insurance protects you if you die early, that's life insurance, and also protects you if you live too long. And that essentially is the LTC rider. So let's take a look at this, and we'll go from there. As Bill indicated, I've been with John Hancock since 1992. I've been their sales leader essentially forever. I have every company record in terms of most production in a year, $85 million at target premium, most production in a month, $17 million. I would say my expertise is second to none in the industry outside of using the GoToWebinar system. So again, appreciate everyone for their patience. So let's just jump right into the presentation here. 65 is a magic age. If you happen to hit 65 years of age, there's a very good chance you're going to live beyond normal life expectancy. That's what this chart shows you. It shows you that if you're a married couple and you hit 65, 75% of those married couples are going to live beyond 85. 50% will live beyond 90, and 25% will live beyond 94. So we are living longer than we ever have. And if you can get to 65, there's a good chance you're going to live a very long life. Now, with that longevity comes issues. So if we move the slide now, and we know the story. 70% of people over age 65 will require LTC services at some point in their lives. Average stay is about 3 years. Costs have gone through the roof. Again, we know the story. The question is, what are clients going to do? How are they going to cover this expense, which unfortunately, if they live longer, they're more likely to need. All right, we'll move the slide forward. It's a tremendous market as 78 million baby boomers will retire over the next 2 decades. So the opportunity is infinite out there. Okay, now, just to give you an idea, in Florida, if you would happen to be in a, in a private room, today in Miami, it's $116,000 or $118,000 after tax a year. Nationally, you're looking at $94,000. For a semi-private room, you're looking at $82,000, and for an assisted living facility, you're looking at $41,000 a year. This is all after tax. So when clients aren't prepared for this type of expense, I say, okay, look at your assets. What asset are you going to sell, have to pay taxes on to come up with this money? But let me make this very clear. Although nursing home costs are through the roof, and there's absolutely full truth in that, people buy these policies not to go to a nursing home. To quote my mom, who I love to death, she said, give me a gun if I ever have to go to a nursing home. So people want to get the care they need where they want, and that's their home. And we're going to talk about that as well. So let's go to the next slide here. Why do people need long-term care? Overwhelmingly, more and more, it's due to dementia and Alzheimer's, 28%, followed by Parkinson's disease and nervous system disorders, you see, are 10%. Heart disease is 8%, and followed by stroke and connective tissue diseases. Claim demographics, overwhelmingly more females than males. 69% are female, 31% are male. The reason for that, people ask, is this a female issue? No, it's not, and we're seeing more males elect the rider as well. But females generally outlive males, right? So by living longer, they're more likely to need it. And what we found through our research also is that, for better or worse, females kind of run the household. They kind of take care of everything. They're kind of the glue. And as a result, sometimes they kind of wear down, especially, after years and years of kind of taking care of everybody. So that's the reason for females. I was shocked at this. The average claimant age, most people think that this affects people in their 60s. Well, that's when people maybe are more likely to buy it. But the average claimant age is 83. And that's a really important factor to keep aside. We'll talk about that later, because with inflation coming and interest rates rising and costs increasing, if care today in Miami for a private room is $116,000, and I'm 60 years old, what's it going to be 23 years from now when I'm likely to have a claim? I was shocked here, too. The youngest claimant age, 33. Many people think of long-term care as something just for the, retirees. We're seeing more and more young people also. A buddy of mine, and unfortunately he's in our business, he's a very successful producer, probably writes about $1 million a year, was showing a client's son how to skateboard. He used to be very good in the day when he was younger. He slipped, he broke his hip. He was out for, unfortunately, almost a year and a half. Hip surgery was major. And, he fortunately had an LTC policy. He's only 45 years old. So we're seeing more and more young people gravitate towards this. We see them, unfortunately, have real experiences where they know a friend, a relative, a parent that may have gone through an LTC claim, and they want to make sure they're prepared for it. Our oldest claimant age, God rest his soul, it's 108-year-old male. So, it doesn't stop. If you live, it's something that, unfortunately, you have to deal with. Most common care settings at the time of claim, as I mentioned to you earlier, people want care, and they want care where they want it, and overwhelmingly, it's in their homes. So we see 49% home health care, 27% skilled nursing facilities, and 24% assisted living facilities. I also want to point out that essentially 1 out of every 5 policies I write now has the long-term care rider on it. So who's going to pay for it? Well, Medicare, the maximum benefit's 100 days, and it only pays for a medically skilled nursing facility. Medicaid, I don't know if anyone's had the misfortune of having to see someone go on a Medicaid claim. You can't even afford to buy a pack of chewing gum. You got to really spend on all your assets. It's not for our clients. It's not the way to go. Individual long-term care, we just came out with a brand new product. We think it's revolutionary with its Flex account, and maybe Bill and Carrie will do a second presentation on that at some point. But long story very short, long-term care, the rates are not guaranteed. The rates can increase, and John Hancock has raised those rates, and so has everyone else, because people are living longer, they're getting sick, they're getting better, and it's kind of a vicious cycle here. So standalone policies, they're expensive, the rates are not guaranteed, and the tagline is, if you don't use it, you lose it. Many people are reluctant to pay a lot of money for an LTC policy that they'll hopefully never use. We can solve this with the rider. The other option is you can self-insure. And again, when clients say that, I kind of point to their assets and say, okay, what are you going to cash out, pay taxes on to cover your expenses versus having this tax-free benefit that's available to you immediately. And that's the key. It's a tax-free benefit. In the past, LTC used to be about net worth. Carrie, I'm sure, called on clients, and clients said, I'm worth $3 million, I'm worth $5 million, I'm worth $10 million. Why are you talking to me about LTC? I'll just self-insure. It's not about net worth anymore. It's about cash flow. And having a plan in place can be the difference for most of our clients between having a comfortable retirement or having a retirement where you run out of money. Okay, next slide. This is one of my favorite stories, and I believe in negative selling. I believe in scary tactics, and this is a scary story. It's a true story. Registered rep in Utah thought he did everything right by his clients. He planned their retirement. He recommended LTC for them. The clients instead said, we have enough assets. We're just going to simply self-insure. Well, sure enough, the parents, as they aged, got sick. Both parents ended up getting dementia. Medical bills were pouring in. The son saw his inheritance disappearing. Well, what did the son do? He turned around and sued the rep. The rep said, listen, I recommended that they buy LTC. It's not my fault they didn't buy it. So he thought he was going to be covered by, he thought he would also be exonerated because he recommended it, but unfortunately he didn't document his file with the advice he gave him. The E&O coverage didn't cover a suit brought on by a third party, which was their son. So the end result was, even though the rep recommended it, he had to pay over $600,000 plus the son's legal fees. This is a true story. The point being is, as Bill said earlier, if you're not mentioning it to your clients, you need to, and you need to start immediately. Okay, how much does the cost of care cost? Well, it certainly depends on the type of setting, whether it's a nursing home, whether it's at your house, whether it's adult daycare or an assisted living facility. But costs also vary based on where you're located. And for everyone on this call, and Carrie and Bill, I'll work with you, we have come out with a free calculator. It's the LTC Cost of Care Calculator. It's one of the coolest tools. It's approved to use with clients. And I call these ADD calculators because they take you about 3 minutes to use. So if we flip the page, we'll get to the next presentation. And you'll see the actual calculator. So what you get is you get a map of the United States, and you can either just click on your state or you can just type in your state name. And then in this case, you'll see Florida comes up. Whoops, no, go back, sorry. Slide before, please. If we can move back to the Florida slide. And what happens when you see that the states, when the state comes up, you'll see the various cities. You choose the city closest to you. In this case, we're choosing Miami. And then it'll be customized. It'll tell you today what the costs are on a daily, monthly, or yearly basis. So in Miami today, you'll see a private room is $9,700 a month, which comes out to $116,000 a year. That's an after-tax number. You see for home health care, today it's $3,100 a month. Adult daycare, $1,100. Assisted living costs are $2,100. So you can sit down with your clients and go through this with them. You can email it to them. They can, play around themselves based on what they think they might need. And maybe it starts off with, assisted living, and then maybe they need a home health aid, and then they progress to a nursing home, and they can get an idea of what the costs are. And then it gives you an idea of what the future estimated costs are. So remember I told you the average age of claim was age 83? So imagine a 60-year-old buys this today. Right now it's $116,000 if you live in Miami after tax for 1 year of a private room. 25 years from now, you'll see it's going to be $326,000. That's the time more likely than not that they're going to have a claim. Where are they going to get that type of cash flow? That's per year. Let's flip this side and see how it looks in the state of New York. So we're lucky down here in Florida. We got great weather. We got no state tax. Well, if that same person resided in New York, instead of being $116,000 for a private room today, it's $173,000, and 25 years from now, it's projected to be $484,000 a year after tax. Again, where are they going to get that type of cash flow? All right, let's turn this slide. So we will provide everyone who's on the call with this tool that they can use with their clients. So at the end of the day, it really comes down to, do you have enough retirement income to cover your long-term care costs? I would almost make notes if any of you in front of the screen are able to take notes here. These are really the questions at the end of the day. Do you have enough retirement income to cover long-term care costs? Would you have to spend on assets to make up any shortfall? How do you feel about spending down your assets to qualify for Medicaid? And do you own a long-term care insurance policy? These really are the questions that are resonating with clients right now. According to LIMRA, the number one concern for clients, for seniors, it used to be running out of money. It's now making sure that they'll be able to take care of themselves and affordable health care. Everyone goes to the emergency room, to the doctor, they do an x-ray, you see your bill is $12,800, and it's just scary to say, I don't want to be, as a parent, I don't want to ever have to go to my adult kids for help or for care. I want to make sure I can take and provide for myself, and again, having a plan in place is critical for that. So combining life with LTC, how does it work? So with our contract, you'll pay a premium, you'll buy a life insurance policy, and then you'll be able to accelerate the death benefit on a monthly basis at 1%, 2%, or 4% per month to reimburse for LTC claims. So, for example, my premium is $10,000. My life insurance policy is $1 million. I elected a 1% rider. That means I can access that $1 million per month at 1%, which is $10,000 per month. If I elected a 2% rider, it means I can access up to $20,000 a month, 2% of $1 million. If I elected the 4% rider, it means I can access up to $40,000 a month. It is a reimbursement contract, so if your bills are only $1,000, even if you're eligible for $40,000, you'll only be able to get $1,000. The dollars come right off the death benefit. It is completely tax-free. It doesn't come from the cash. It's not a loan. There's no loan interest. It's dollar-for-dollar reduction, which not all our competitors do, from the death benefit, completely tax-free to reimburse for LTC costs. Whatever is not used goes to the family. So if you don't use it, you don't lose it. If you had $1 million policy and hopefully you never get sick, you never need it, the family inherits $1 million. If you end up needing $500,000 of benefits to reimburse for LTC, the family gets the leftover death benefit of $500,000. So again, if you don't use it, you don't lose it. One way or the other, it's going to pay out. Let's go to the next slide. Okay, there are different types of riders out there, so I'm just going to spend a few minutes kind of going over each of the different rider types. And again, Bill and Carrie, what we're going to do is we're going to send you a piece called Dare to Compare. It's a handy reference that compares our rider to everyone else's in the industry. And it's just a nice way to kind of have a quick eye-level view, cheat sheet view of the differences. I'm biased, but we might not always be the best solution. So generally, the riders are broken into non-qualified riders and qualified riders. Non-qualified riders are generally chronic illness riders. So Lincoln, Pac Life, Penn, Protective, Prudential fall into that category. Those riders are generally very expensive, but the differential between those and qualified riders is, generally speaking, the condition must be permanent. So I'm down here in South Florida, and I know Bill can attest to this. He has some nice cars. I've seen him driving around. You're on 95, and a big 8-wheeler comes, God forbid, smashes into you. You break your back. The doctor says, look, you're going to be laid up for a year, but you will recover. This is not a permanent condition. You will not get any benefit, generally speaking, from a chronic illness rider. A lot of chronic illness riders also limit how much you can get. So sometimes it's 40% of the death benefit to a max of $1 million. Other times, the chronic illness riders, they reduce the death benefit more than dollar for dollar. So I said earlier, if you had $1 claim, your death benefit's reduced by $1. With a lot of the chronic illness riders, if you need $1, you have to maybe reduce the death benefit by $3 or $5. So they're expensive, and they're not a true LTC rider. The qualified riders are broken down between indemnity and reimbursement. Everyone, I'll make it simple, everyone's indemnity but us. We're the only reimbursement. The advantages of reimbursement, it keeps the cost very low. The other advantage of reimbursement is that the LTC rider rates are fully guaranteed. One of the biggest sticking issues of buying a standalone LTC policy is that the rates are not guaranteed. With us, even if you sell it on a non-guaranteed product, the rates will never change. It's a huge selling point. The other big issue is that we're not subject as a reimbursement rider to the IRS per diem, and that needs to be updated. Now, it used to be $300 a day, now it's $350 a day, and they will update from time to time. But we're not subject to the IRS standards. The line that I use, and it usually makes people chuckle, is if the IRS told you on your next family vacation, how much you could spend, you think it would be fun and enjoyable. Our clients don't want to worry about the IRS limits. They want to make sure that they get the quality of care that they desire, that they want, that they choose. And we can go up to $50,000 a month at issue, up to $50,000 a month. The max policy size we can issue for this is $5 million, and so the max rider in that case you could elect would be 1%. 1% of 5 would be $50,000 a month. By the way, the differential between 1% rider, 2%, or 4% rider is just a few $100s. The last thing I'm going to talk about is cost. The cost of adding the rider on an indemnity plan is significantly more. They average generally 20% or more, where the cost for adding it to our policy, because it's a reimbursement model, is generally 7 to 9%. The average is 8%. So significantly lower cost. Now, the indemnity, in all fairness, there are some advantages there. You don't need a qualified Medicare worker. So a lot of people say, well, I'm happy to have my sister or my cousin be the caretaker. My response is, that's fine and good if that's what you want, take an indemnity plan. But the reality is, you're buying this so your wife, so your sister, so you don't have to worry about that. So you don't have to do that. Because your world's upside down if a loved one needs, care. The last thing you want to do is be a claim adjuster, which you'll need to do with these indemnity plans, and to be the caretaker. So let's flip slides and look at a quick example here. So this is the standard compare piece that we're going to forward to Bill and to Carrie, who can forward to everyone on the call. And this kind of explains our rider, the cost, the benefits, compared to other companies. And there's about 15 other companies in the book. And you see here versus Pru, the rates with Prudential are not guaranteed. You see here, this is kind of critical here, that the condition under qualifying conditions has to be permanent with Prudential, does not have to be with us. And of course, you see the cost of the rider at 17% additional versus 8% for us. So we'll send you that handy reference guide. If you flip the page, we'll take a look at ours in more detail now. So when you get an illustration from us, this is how it looks. So you see on the left-hand side, you have a male, 45, so you can prefer with the LTC rider. It tells you your plan premium is $3,300. Your initial death benefits are $500,000. The accelerated benefit for long-term care is the same. We allow 100% acceleration up to $5 million, and then it tells you how much you can get per month. In this case, we elected a 2% rider, So 2% of $500,000 is up to $10,000 a month, and below it gives you an idea of what the reimbursements for: home health, nursing home care, assisted living care, and adult daycare. Let's flip the slide. And this is just the actual illustration itself. Let's go through that. You'll see the death benefit and the benefit for LTC. So let's turn the slide again. And one more time. We'll have to go through the full illustration. Let's go to the next slide. Okay, this will give you an idea of the cost. So you see here, and Bill knows I like to eat well, and I go to South Beach a lot. And I promise you, the differential for adding the rider is generally less than what I pay for one dinner in South Beach in Miami. So if you take a male who's 40, the annual premium without the rider, specifically for $500,000 of death benefit, was $28.32. With the rider, to 7% increase, goes to $30,034. Price differential of $202. And that story pretty much holds true. You know, you got a female who's 50. It's $37.22 without the rider. It's $39.93 with it. 7% increase, extra $271, and you're talking about now providing a living benefit of $10,000 a month. Next slide. Our product, we have a very, very competitive product. The product that we most often write the long-term care rider is the Protection UL, because that's the lowest cost product in the industry, #1 sold UL in the industry per LIMRA. And many times with that product, we can add the LTC rider and still be less than our competitors without the rider. And then when they add the rider, because theirs are much more expensive, the separation is huge. So you see in this example, we have a 65-year-old preferred non-smoker, $750 of death benefit. It was a lifetime pay. We're $12.1 without the rider. We're $13.1 with the rider. It's an 8% increase. Our $13,001, you'll see, is still less with the rider than Nationwide, Protective, Prudential, or AXA without the rider. And you see when they add the rider how much their costs are. The cost separations are huge. It's over 20%. And because we're not subject to IRS limits, you'll see here that we're providing a greater benefit than anyone else other than AXA. And AXA, as you can see, their cost is astronomical. It's almost, it's 45% more. Let's flip the slide. So before we wrap up, I'm going to give you a quick sales idea that's been really successful with us. And then Bill and Joseph and Carrie, we can open up just a few questions. So let's turn the slide here. This is my favorite. This is finding the money for a sale with LTC. So we're looking for clients who are 62 and older, and we're looking for clients who the Social Security is kind of the icing on the cake or the cherry on the cake. They've got plenty of other assets. They've got plenty of other income. They like getting their Social Security. They've earned it. It's theirs. But if they didn't have it to live, it wouldn't change their lifestyle. And these are clients who are generally either near retirement or retired, and they're concerned about what they're going to leave to their children, and they're concerned about medical expenses for themselves. As I told you, per LIMRA, seniors right now are so concerned about getting proper care and what inflation and rising costs will be in terms of being able to provide the medical care they're looking for. So what we're doing in this example is to use your Social Security money to fund a life insurance policy and adding the long-term care rider. So let's flip the slide, and we'll walk you through a quick example. This was a gentleman, Mr. Davis. Mr. Davis was an executive, a successful business owner. He was 65, preferred non-smoker. He just was recently retired, and he did not need the Social Security money, and he wanted to protect himself from draining his savings from long-term care expenses. The reality is that he went through a horrible ordeal with his mother and saw how it destroyed her assets, how they lost basically everything, his full inheritance, and how it was so difficult to provide LTC for his mom. The motivating factor here was he didn't want to have to burden his kids like and for his kids to go through what he went through with his mom. So we explained to him what happens when you receive your Social Security benefit. because he had plenty of other assets. He was worth a few $1 million, and he had a nice pension plan. So he clearly knew. He said, yeah, I pay tax on my Social Security. So I think the max benefit you can get this year is around close to $30,000. And if it's not the only income you're receiving, it's subject to tax. And not only is it subject to ordinary income tax, it can bump you up in the higher tax bracket. And it can also cause you to have to pay that extra Medicare surtax, that extra 3.8%. So the most people are getting in their Social Security, if they're lucky, on an after-tax basis throughout the years, maybe around $18,000, if they're lucky. So the tagline that I use, and you're welcome to use this with your clients, is if you're concerned about rising health care costs and you're concerned about running out of money when you retire, if, God forbid, you have a catastrophe, if you have a situation where you need LTC, if I can turn your $18,000 after tax that you're getting from Social Security, your $18,000 after tax a year, into $18,000 a month tax-free to reimburse for LTC costs, would you be interested? $18,000 a year after tax, or $18,000 a month tax-free? And what we did here, as you can see, is we showed him taking his after-tax money from his Social Security, and we bought a life insurance policy of $886,000 with a 2% LTC rider. That provided him $17,454 a month. Hopefully he never needs it. His family will get $868,000, which is double if he would have invested the Social Security money after tax, which no one does anyway. But if he, God forbid, got sick, he can get basically what he would get in a year after tax from Social Security on a monthly basis. We have a program called Solutions, which can customize this presentation for you and your client. And again, we'll make that available for Carrie and for Bill and for everyone who's on this call. So if you flip the slide, I believe that should be the end of the presentation. And I'll turn it back over to you guys to see if you want to open it up to any questions.
Yep, actually, Andy, it's a closed call because the amount of agents on. So what we'll do is after today's presentation, just call us or shoot us an email with any questions. And then we're also going to send everyone on the call all of the information that you learned about today, and including the calculator. So if Andy will send that over, and then we'll get it out to all of our agents. All right, so with that said, Andy, do you want to close with anything? Are you all set?
No, we appreciate everyone's time. It's been a pleasure working with you and your organization, Bill. We're looking forward to cementing it, and hopefully we'll be talking about Vitality soon. For everyone on the call, I appreciate your time, and for thinking of John Hancock. We're sorry about that delay initially, but hopefully it was time well worth spent. So, Bill, thank you, and we'll turn it back over to you.
Thank you very much. And yeah, we're going to set up another webinar for the Vitality program, and we'll definitely be a little more up to speed with the GoToWebinar presentation. So don't worry about that. But Andy, thanks again. Great job. Okay, so we have about 5 minutes left. Joe is just going to talk about our upcoming training webinars, and we have a few things new here at Levinson, and then we'll give away our free tablet. Joe, are you there?
Yeah, thanks, Bill. I just want to mention a couple upcoming webinars, actually starting as early as next week on the 14th. We actually have a webinar at 11 a.m. on disability income sales. We're going over the basics of a DI product, what to look for in a potential client, and how to really present disability income. And then Wednesday, which is the 15th, we're going over some immediate annuity training, which is actually going to be headed up by the Levinson Annuity Division, which, of course, Josh Hoffman in our office actually maintains. So you can reach out to Josh at extension 23 for any questions on annuity products. And then Friday, so a week from today at 2 p.m. Eastern, we're actually rolling out a brand new accelerated underwriting program, which has never been done before. You can actually write up to $1 million of coverage for both term and permanent products without a permanent exam. It is one of the neatest accelerated underwriting programs I've seen. There'll also be an email on Monday afternoon that'll go out to everybody to register. That's definitely going to be a webinar you don't want to miss. Issue ages for that underwriting program actually go up to age 60. So a great way to actually write a lot more coverage much faster without the permanent exams. Real quickly here, one slide here on what's new at Levinson & Associates. Of course, I mentioned Josh Hoffman, who heads up our annuity division. We have some great new annuity training sessions, which are actually called our Press and Play Annuity Training. We actually send out emails every Tuesday with an updated audio file. It's about a 3 to 5 minute clip where you can listen to a new sales concept specifically on the annuity products that we represent. Another great thing that we've just launched today is the Levinson Annuity Tablet Coupon. So basically the way this coupon works, it's available on CarrieLevinson.com. You can reach out to Josh as well. He can send you the coupon. If you haven't done any annuity business with us in the past, you're basically submitting this coupon with your first annuity case, and when that policy actually goes paid and we're past the free look period, we will send you that free tablet, no questions asked. What I love about this contest is for indexed annuity products, there's no minimum premium. And then for fixed products, we have a $50,000 minimum premium. But of course, if you haven't had the pleasure of working with Josh in our office, reach out again. He's at extension 23, and he'll get you up and running with the Levinson Annuity Division. In the middle here, we've got a brand new designation training. This is pretty neat. It's actually a FINRA-recognized designation that's actually co-op by Transamerica and Levinson & Associates. So just for about under $300, you can actually become a certified financial education instructor. That designation normally costs about $2,000. So at the end of that designation training, you'll actually get all the materials and have the know-how to set up training classes with your prospective clients. You can actually teach them a lot about being financially educated. It's a great way to kind of make yourself stand out in your industry and in your community and actually help clients understand why financial planning is so important. On the bottom here, our brand new Lightning Issue Term product. We had our Final Four contest, which is actually running until May 1st. This is a great contest. We launched the Lightning Issue Term product about a year ago. It is the fastest issue life insurance product in the market. Basically, there's a 3-minute quote and app that can be done 100% online. Clients can receive instant approval, even without agent involvement. So a client can actually go to your website that we provide you 100% at no cost, go through that application process, buy coverage, be approved instantly, and the policy actually gets mailed within 48 hours. So the contest is very simple. Basically, write 4 cases between April 3rd and May 1st of 2015, and we'll send you a tablet. Again, no minimum premium on that product. Very competitive, very easy to use. Another great thing about the Lightning Issue Term product is it's actually a participating carrier in our free scholarship platform, which is on the top of this next slide here. So the scholarship platform actually allows you to give clients up to 1 free year of college tuition at over 340 colleges across the country. What I love about the scholarship program, you'll see on the top, we have some brand new carriers that were just added for 2015. It doesn't cost you, the agent, a penny or the client a penny. We have over 40 products to choose from, whether it's annuities, indexed UL. With the rising cost of college education, this is a great marketing platform to get your foot in the door. Also, I mentioned the Accelerated Underwriting Program. Our rollout webinar is on the 17th at 2 p.m. Eastern. You'll see that in the middle of the screen. And then on the bottom here, this is pretty neat. We actually made some brand new updates to the free agent websites. We'll be launching those on the 24th of April, which is, of course, the day of our expo. So we have a new final expense quote engine on your free agent website, new themes, new quote engines, a lot of great material to actually help you reach out to clients and to give yourself an online presence. You know, we can't stress how important it is to have an online presence, especially in today's industry. We do that for you and actually help you get up and running with Facebook quote engines, social media marketing material, and that free agent website, which you can check out at insprofessional.com.
Okay, great job, Joe. Okay, I just want to mention, too, before we go, that we're going to dive in with Andy in the Vitality program a little deeper in the next week or two, and then we'll also do a little recap of everything you saw today. And I just want to apologize for the error that we had when we first launched. So we know your time is valuable, and we apologize for that. So with that said, we're going to introduce today's tab.